Today's Tuesday tax tip of the week has to do with the tax extenders law that was just signed into effect. What this law did was it took a number of income tax deductions that were supposed to expire at the end of 2013 and it extended them to 2014. Some of the more common ones would be if you're an educator, you're aware of the fact that for many years you've been allowed to deduct $250 as educator expenses above the line, meaning you get the deduction whether you itemize your deductions or not. That was extended through 2014. Um, a big one in today's economy has been extinguishment of mortgage debt. Um, if Typically, if you have a mortgage debt that you satisfy for less than its face value, in other words, let's say you have a $200,000 mortgage, you sell your house and you pay the bank $150,000, that $50,000 that you didn't pay back should normally be considered to be income. There's been an exclusion in the last few years that has allowed this $50,000 to not have to be picked up in taxable income. That provision was extended through 2014. For those of you who pay mortgage insurance premiums, those also will still be deductible in 2014. Some people are also in a situation where they itemize their tax deductions, but their sales tax exceeds their state income tax. So if your sales tax exceeds your state income tax, you're allowed to deduct the greater of the two in 2014. In 2015, you'd have to take your state tax deduction even if it's less. In addition to these individual provisions, there were a number of business provisions that were also extended. The biggest one being Section 179. Section 179 is an Internal Revenue Code section that allows you to write off certain assets in 1 year that would normally be depreciated over a number of years. The allowable amount has been $500,000 for the last few years. It was supposed to be $25,000 for 2014. It has been changed and it is still $500,000 for 2014. There are also additional depreciation provisions which would allow an additional $8,000 on vehicles in the first year that they're placed in service, and something called bonus depreciation, which allows a 50% depreciation on certain items that may not qualify for Section 179 and can be very useful to individuals. I know I'm throwing a lot of things at you in a very short amount of time, but I wanted everyone to be cognizant of the fact that there are certain provisions that were just placed into law and it may apply to your tax return. So I want to make sure that you guys are aware of it and that you make sure that your accountants are aware of it. And have a happy holiday season, and I will see everybody next Tuesday.